Okay, brief introduction of myself. I'm Jeremy Lee, the co-founder as well as the Chief Technology Officer for Street Sign Technology Group. So under Street Sign, we have the SRX property portal, ST Property as well. And we run, if you listen to the media or the news every month, you will often hear about our price indices. So if you hear that SRX property says that HDB prices have went up or come down by a certain amount, private property prices come up or go down by a certain amount. So that's all coming from us, right? Okay, so SRX stands for Singapore Real Estate Exchange, and thanks to the major estate agencies like ERA, Knight Frank, Orange T, and so forth, they have contributed, their salespersons have contributed real-time sales and rental transactions to a neutral platform, SRX, that allows the entire ecosystem, the real estate ecosystem, to benefit from. So today you can hear price indices from us, or in the past even HDB COV in real time, almost real time, so that once the month closes, we don't have to wait for a quarter before the URA or HDB releases their price index. We will know what happened last month, right? Because the first person to know what your neighbor transacted for is not the government, usually. It's the agencies and the agents. So that system is all set up as part of the SRX property portal, as well as right now, even ST Property is part of this ecosystem. Okay, so today's topic is, sorry, pardon me for my voice, because I think something's been going around and I've been almost going to lose my voice, but I'll try. So today's topic is Singapore property worth investing. So maybe just to have a show of hands, how many of us think that the Singapore property is still worth investing? From show of hands, all right, we can see that there is about at least 30%. How about those who feel that Singapore property is not worth investing? Right? Okay, there's a couple of hands. So I see that about another 20%. So about 50% of them is waiting for an answer, right? Okay. So I'll try to answer that, but as you can expect, I won't bluff you. I can expect from any speaker, nobody will commit to you exactly that you can invest or you can't invest, because ultimately it depends on your own individual circumstances. And I will highlight what are the things to look out for, what are the facts that are in the marketplace today for all of us to make our own decisions. So I'll look at the different parts of supply and demand. I'll look at what the transactions tell us, what the numbers tell us, and what are the future economic fundamentals that we have to take into consideration before we ask ourselves the question, is Singapore a good place to invest? In the long run, I don't think anyone would disagree, because Singapore, after all, is a city-state. Now with very limited land supply, as long as we have good economic fundamentals, good governance, we should be able to do very well in the long run. Because if you look at any city-state, once there's limited land, we have a growing population, the prices should go up. But in the short run or in the medium term, then it all depends on your own individual circumstances. So let me just go through some of the numbers, and then with that in mind, we can evaluate whether this is a good time to invest or not. Okay, first, let's look at the macro levels. I'll be talking about some of the cooling measures versus the resale prices and some of the economic indicators, and also look at the supply, as I mentioned, supply and demand. Before we look at some of the potential places we could invest if you wanted to, and that is tied to the URA master plan. And also, I'll leave you with some of the tools at the end of the session for you to decide what kind of situations will apply to you, and you can use or leverage these tools to do your own investments. Okay, first is let's look at let me just take my laser pointer. Okay, so we have this chart over here that shows the property prices versus GDP and income. But before I even show you this, I'll show you one of the applications I use to generate some information in real time. This is called the SRS Analyzer. It is essentially our Bloomberg, but the Bloomberg for real estate. So you can ask the system any question about a real estate market, run some hypotheses, and it will tell you what the capital gains, rental yields are, and so forth, right? So now today, I want to ask a question for the Singapore property marketplace. Are prices too high today? Right? I mean, that's a fair question to ask. Are prices too high today? So what I would do in this case is I will go to market analysis. I'll try to ask and generate for maybe resale non-landed, right? Resale non-landed. And I want to see in the last 20 years, what is the kind of capital growth in order to understand whether from a long-term perspective, are prices too high today? So let me just do yearly, and so I'm doing a live demonstration over here, 1995, and I look at, let's say 99 years, a 99 years property, right? And I look at resale, and I look at non-landed. I can do it for various districts and so forth, but let's just look at the overall property market trend. And I like to use this system so that I can just draw lines on it and try to understand. Okay, so this is this is the PSF trend of Singapore properties, resale non-landed properties since 1995. So you can see over here in 1995, the PSF was, let's just see, 539. Today, the PSF on average is 1,044. So 500 plus to 1,000, how much has it increased? About double, right? So double in the span of about 20 years. So if I want to know what is this annualized capital gain, or maybe what it means is every year how much they grow, right? I can just draw a line over here. So I'll just, I see, I'm drawing a line. If you look at the top right hand corner, it's showing me that the average annual growth rate is about 3.4%, thereabout, 3.4%. So in other words, the compounded annual growth of property price in the last 20 years for resale condos, 99 years resale condos, across the whole island is 3.4% per year. So 3.4% per year, as any kind of investors, first we ask ourselves, is it very, very high? Given that in the same time span, the nominal GDP growth is about 6% per year. 6% per year, nominal GDP growth. We are all looking at nominal, it's not inflation adjusted. These are the actual PSF prices, right? So if you think about it from the long term, my own personal opinion is that a growth of 3.4% per year hardly looks like any kind of property bubble, right? Especially if you think about Singapore being an island city-state. We have 2 IRs that came out in the last couple of years. We have great demand. We have low inflation. So inflation we know is about 2% on average per year. And this property price at 3.70% hardly beats inflation, given the Singapore economic fundamentals. So that is what we see in terms of the very long-term growth, right? But why are there cooling measures, if you ask ourselves? It's really because if you look at this particular chart, in the last few years, after the financial crisis, we see from 2009 onwards, if I draw a line here, you can see in 2009 onwards, the property price increased by 60%, thereabout, in a span of 4 years, and at an annualized growth rate of 12% per year. So that is very, very scary, yeah. But so the government introduced the cooling measures, and what you see over here in the last 2 years is that prices have actually come down a little bit. It has not dropped, it has not collapsed, but it has just come down a bit because of cooling measures. But if you see over here, this is what worries the government, the rate of increase. But one thing as long-term investors, when we look at numbers like that, is we also look, if we look far back enough, we will see that there is every time there's a price drop, it is always due to some kind of external shocks, right? So there's one external shock over here, that there's an Asian financial crisis, and then there's another one is a SARS crisis over here, and then this one is the global financial crisis, a GFC. Yeah? And in each of these three crises, you can see that especially after the after the Asian financial crisis and during the SARS crisis, there is the prices continue to drop, and then in fact it actually stagnated for at least 5 to 7 years. And this particular region, it seems that we have not accounted for too much. When GDP is still growing, unemployment rates are low, and everything, inflations are curbed. So we see that property price did not actually go up. So one way of looking at this is that property price in the last couple of years is trying to find its value, right? It's trying to find its value, find its footing, and until the cooling measures came about. So if you look at it from the long-term perspective, you will realize that the annualized growth rate is only about 3+%. So that answers the question of whether property prices is it really that high today? Unless we consider 1995 to be the starting point to be very high in the first place. Otherwise, if you look from a 20 years perspective at an annualized growth rate about 3+%, sounds reasonable, right? Reasonable. So at least it is not like a bubble situation. So that should allay some sort of concerns in a lot of us in terms of where we think the prices are today. So let me just go back to my slides over here. So this is a summary of just what I discussed. And the various lines that you see over here, I'm sorry that you probably won't be able to see it behind. But you can see that we overlay for the last 20 years, the income growth as well as the GDP versus our price index. And since 1995, if you can't see, I'll just read this out to you. Since 1995, GDP growth, nominal GDP growth, annualized growth rate is 6%. So total, it increased by 220% since 1995 until today. Whereas property price has only gone up by 95.8%. So that's less than half. So just now I drew the line, right? Less than half, about 100% growth only. Income, another measure from SingStats, has grown in the same time frame by 143%. So in fact, income did outpace property price growth. If you look at it in the last 20 years, not looking at it in the last 5 or 6 or 7 years, right? But if you look at it long enough in the last 20 years, you will see that the other macro numbers seem to suggest that the property price is not really that in a bubble kind of situation in any way, right? In fact, if anything, it has not even kept up with GDP growth for a city-state. So that is one macro point that you might want to keep in mind as you think whether is it a good time to invest today, right? Okay. Right. So this is another chart where I've overlaid over here the property price index for resale non-landed. Okay, why do I always use resale non-landed? Because we could look at the property price index for the overall market, which will include landed, non-landed, and so forth. But as we know, landed foreigners can't buy, right? Only Singaporeans can buy. So if you look at it from an investment point of view, then non-landed condos will be more interesting. And also, why do we always look at resale? Because sometimes if we look at new sales and we combine new sales data with resales, it may have a bit of distortion because resale looks like the fundamental pricing, right? If you want to understand whether the prices have gone up by how much, resale is actually a good measure because it shows fundamentally what people actually are paying for it. But whereas it comes to new sales, sometimes it depends on major launches. If there's one big launch or luxury launch, suddenly the PSF just goes up or down, so we don't want that to distort the market. So looking at resale non-landed index gives us a good indication of the property market. And over here we overlay the various rounds of cooling measures. You can see that there is at least 10 rounds of cooling measures over here, with loan to value ratios as well as TDSR and so forth. So the last one, the red color one, TDSR, is the one that all of us would agree that is the Achilles heel, right? And but since then, the interesting thing is that TDSR was introduced somewhere in June 2013. So that's about 2 years ago. And since then, according to our latest price index that we released last month, the property price has dropped by a mere 6.5% over the span of 2 years. So after many rounds of cooling measures, it has come down by 6.5% only. So it has not really sort of collapsed in any way or have corrected by a fair bit amount. Because a lot of people we have been talking to, they say that, hey, I want to wait for correction before I buy, you know. But the problem is very difficult to predict the future. And the numbers tell us that, well, it hasn't really come down that much. Okay, then the next question we ask ourselves is, why, right? And one of the reasons we think is that a lot of us is still quite cash rich, Singaporeans. And one thing as well is that the interest rates are actually quite low in the last couple of years. So that has definitely fueled some sort of like asset bubble in a way. But we know that what's upcoming, there are at least 2 indicators that will have a downward pressure on the price. 2 indicators. One, obviously, is interest rates might increase because it's rock bottom. The only way is up, right? So Fed is going to announce whether they are going to increase the interest rates this September. It's anyone's guess whether it's going to increase or not. But one thing that at least I wouldn't say it's my advice, what I've observed is that no matter whether the interest rates increase or not from Fed, there's a very good chance that our own SIBOR rate will increase, right? Why? Because there is a FX. There's a FX component in it, and we are under quite a fair bit of pressure. You know, Singapore, if you look at our currency, has been very strong in the last couple of years, and we are measured against a weighted average of our trading partners, right? So who are our major trading partners? Places like China, Malaysia, so forth, right? Europe and US. So the top 2, China, Malaysia, they are, we all know how much the ringgit has fallen, right? Today it's like 3 ringgit to 1 Sing dollars. And the other one is China has just depreciated their currency. So there is some pressure for the Sing currency to adjust downwards in the long run. It might, or rather in the short term. So if our currency or FX against the USD does drop, then obviously our interest rates will continue to rise. I mean, if you're in the financial world, you probably see that, right? So that's one thing to consider. There are some FX issues. If USD currency continue to strengthen against Sing dollars, as it has in the last couple of months, then we do expect the interest rates to continue to increase. So that's one thing that will have a downward pressure on the prices. We have seen that in terms of the bank auctions, you have increased quite a fair bit since last year. And although the non-performing loans are not as high as it used to be during the old financial crisis, it's also creeping up. So that is one risk factor. Okay, then the other risk factor that we see in terms of, or rather it's not a risk factor, but more like a downward pressure on the prices, is this supply, right? Upcoming supply. So if you see over here, I've plotted over here again in the last 20 years, thereabout, since 1996, the supply of completed private residential units, excluding ECs. So you can see that all the way until 2013, from 1996 to 2013, a span of almost close to 20 years, about 18 to 19 years, you see that on average each year there is an additional 10,000 supply of units. And but since 2014, which is last year, there is about 20,000. So last year we had almost twice the number of completed units coming online. And this year we expect to have slightly higher 21,000. Next year another 21,000. So we will see that the supply is actually twice that of average in the last couple of years. We know that we ramp up in terms of the government land sales and so forth. So this has definitely put a downward pressure on the rentals, right? If you see, the rentals have been coming down every single month, every single quarter, on the private side especially, and you will notice that that is really because of increasing number of supply, and then there's also, you know, expatriates also have quite a fair bit of squeeze on their packages. So if you want to know what the latest figures, let me just go to the SRX website, because I don't have much time. But if you go to SRX website, you can see that this is a portal that you can get the latest price index information from. So whenever you hear on the media that property price has gone up or come down, you can always go to under property news over here at the top right hand corner, and then there is a SRX price index over here. So when you scroll down, you will see, for example, it says rentals declined by 0.3% month on month, but overall since the peak in January 2013, rentals have come down by 12.5%, right? So every month you get a summary of what the resale has done, or what the rentals have done for HDB, for private and everything. So if you want a summary, just come to this web page. You will see all the what prices and the macro numbers have done in the last few years. Let me just go back here. So in terms of supply, there's downward pressure. But if you look at in terms of demand, it's pretty interesting, because here I plot out the developer sales volume versus the new launches every year. So you can see that in the case of, let's say, 2010, there are about 20,000 new launches, and the sales, blue color is a developer sales, and it seems to be able to absorb everything, you know. So if you look at this green line and this blue column over here, they are very close to each other every single year, and so that indicates that the demand is in line with the number of developer launches, right? Developer says, yes, sometimes we hear news that in certain places like Upmore, it's like a sort of ghost condo, right? Nobody's buying it. But reality is, if you look at it from macro perspective, all the numbers, most of the demand can be absorbed, or rather most of the supply can be absorbed. We see the latest one is High Park Residences, and the sales is very good in terms of the take-up rate. And okay, so this is just another chart for us to have an overview of how the property market has done in the last few months since the cooling measures. Okay, if you have seen on the news and everything, we released what we call the XValue. So XValue allows you to find the value of your unit, and it's all free for all of us seated here. Later I'll just show you very quickly how you can actually register for your property tracker, and using a computer valuation that we provide for free to look at the value of any unit you want. So as long as you have the unit number, you can see how the unit has done. So we did a study, and we did a computer valuation for all the units in Singapore, with the addresses, and we found that during the market peak January 2014, the non-landed private market is about $400 billion, and in March 2015, after 1 year plus, it has dropped down by about $20 billion. So that's the cooling measures. So, but the drop is not uniform. You can see in certain areas like Seletar area, there's a 44% drop in the market value, and this is based on what the homeowners, if the percentage of homeowners that would sell at a loss, right? If they sold it in March. So this particular chart is interesting, because sometimes we know that the property price have dropped, the overall property price has dropped only by 6%, but it does not affect every single region equally. And over here it shows that when we analyze based on owners that have bought the property, based on how much they bought the property for, and compared to their current X value, that means if they sell at the X value, what is their paper loss? And we see that in certain districts, just now as I mentioned, Seletar district, 44% will be in the red. So it doesn't mean that property price always go up. Everybody buy, you'll sure make money in Singapore. So you will see that based on this, what they actually bought for, 44% will sell at a loss today. In certain areas, it's less. So why is that the case? Because you can see also that in certain regions, especially there's a lot of new developments, especially if a lot of launches were during the market peak, you would expect that a large majority of the homeowners at that point that bought at the peak would be selling at a loss today, right? Okay, so that is this chart. If you want to see, is also on the SRX website. Just go to the property news, go and search, search something like districts in the red or something like that. You will be able to see this kind of chart. So we release every week some kind of analysis that we have done. So the most recent analysis we ran was Bidadari. Bidadari is coming out, HDB, yeah? It's coming out with this Bidadari BTO launch. And then we try to, I wouldn't say predict, but we actually calculate what would be the launch price roughly by looking at what are the resale transactions surrounding it. So if you want some analysis about Bidadari, you can also go to the SR's website. You should be able to see it on the front page. And then there's a whole archive of very good information. Okay, then over here, you will see that this is, if you are keen to buy a property or invest in a property today, then I don't suggest you to flip properties. I don't think anyone in the right mind will want to go and flip property today. But at least if you're buying for the long term, because the economic fundamentals are still pretty good. I mean, barring the fact that there could still, sometimes there may be some corrections in the property market or the stock market. We should look at it in the long term. And usually when you look at the long term, a good place to start off with is a URA master plan, because we want to see what is the government's plan for the next 5, 10, and 15 years for the different economic regions. And if you Google URA master plan, you will see that these are some of the regions that's pretty interesting. Woodlands, Holland Village, so Bidadari, Marina South, Jurong East, Punggol, Jalan Kayu. Although Jurong East, I'm not so sure whether the high-speed rail is still going to continue, given our friends in Malaysia has a bit of problem. I hope that everything goes well. But so you can see that I won't go through this because I don't have too much time. But you can go to the URA master plan to check out the main features in these regional centers. So especially some certain places like Woodlands, it can be quite interesting as well. Okay, in terms of the future development. Okay, so finally, in the last 2 to 3 minutes, I want to give you some tools, equip you with some tools for you to use if you decide that you want to enter the market, you want to buy the market. First thing you need to do is you have to track prices, right? You have to track prices. And then the second thing is you must be able to look for properties that's of certain value. So in order to track prices, you go to SRX website. Okay, this is srx.com.sg. Okay, this is a free portal. It's a free portal, similar to whatever ST property portal and so forth. You can find properties for sale, for rent, from as well as property prices from the XValue that you can see over here. So you can see XValue. So let's say, for example, you want to know how much your home is worth today, or your investment home is worth today, and you want to receive a free monthly SMS update of the value of home every time we change, we release to you the price index has come up or gone down. You can go to this property tracker over here, srs.com.sg, scroll down a little bit, press on this banner, just put in your postal code, your mobile number, we verify it, and every month you can get a free monthly SMS update on the value of the home, as well as the rental value of the home. So you also know the rental yield for you to decide whether you want to buy, sell, or rent, or what you want to do with your property. And these are based on all the real-time information that comes in. We encourage you to engage agent when you want to do with the transactions, but this only gives you a quick indication of the current prices. But the agents will be able to give you the full details of how the sale value or the rent value is backed by recent transactions and how all the adjustments are done. So they have a lot more reports and details for you. And it's interesting in this property tracker page because you'll also be able to see what your neighbors sold for, you know, and how the pictures look like, what is the value, and what are surrounding listings around your neighborhood. So try it out in property tracker. And one last thing I want to show you at the end of before this session is this properties for sale or rent. Now, if you want to, a lot of portals out there, you can see that sometimes you have a problem with a lot of duplicates and dummy listings, and you have to call like many times before you actually get to a real listing to look at. But on SRX portal as well as ST Property is different because you can surface all the real listings right on top. Why do we know it's real or not? Because we are integrated with SPH. You know, we are part of SPH, and then any listings that have SPH classifieds that's tied to the online, it will be shown over here. So for example, some of the listings you will see that it's also appear on classifieds this Saturday, you know. Then you know that the seller is serious, right? And also because of our tie-up with the agencies, the real estate agencies like Knight Frank, Orange T, as well as ERA, any of your agents that receive an exclusive for sale, so they sign an exclusive, they submit it, it also comes to the SRX portal. So this is the only portal with all the exclusives, and exclusives are definitely the real listings, right? So they are all surfaced up here. So for example, if I just press the search button over here, and I want to see what are the listings, you can see over here that you can see here that this particular listings has a classified on 29th August, which is just today. It's going to appear on the classifieds. It has an exclusive. In fact, there's also a 360 video of it. So this is definitely a real listing, right? You know, there's no doubt about it. If you click through to it, you can see that if you click through to it, you can even look at the video, interactive video of how the unit looks like. So you can see here. And why is it interactive? If you press it over here, you can see I want to go to the, for example, walkway. You just press walkway and you can see some of these listings. Okay, but one last thing I want to show you for this listing search, which is really interesting, is if you are looking for good investment opportunities, sometimes we may ask ourselves, Thomson East Coast Line, right? Thomson East Coast Line, there's a lot of MRT stations coming up in the next 5 years or so. So I want to look at, for let's say Thomson East Coast Line, are there any condos that are selling less than $1 million? There's a freehold property. So asking that kind of question is very difficult to do on any kind of websites that you can think of. But over here, just a matter of seconds, you can do that. So if you see, here you can see that there's an MRT Search. And this is the only portal, I assure you, that you can do multiple MRT stations at the same time. You can do a whole scan of all the MRT stations. So in this case, if I show you over here that I want to see Thomson East Coast Line, and I press here, I'm going to scan the entire Thomson East Coast Line. And I press a search, and I ask myself, okay, where are all the properties around Thomson East Coast Line? And it shows me that there are 4,700 over properties. But if I want to say that, oh, okay, let's just see that I only want to see condos that is freehold. Okay, I'm not sure whether there are any, but let me just try it. $1 million. So $1 million budget freehold condo around Thomson East Coast Line. And these are MRT stations that are upcoming, not even built yet. So because you believe in the capital growth, there's still 109 properties over here, which is pretty interesting. And so like for example, this is 818K, but it's a one bedder. If you want to see where is it, you can actually view a map, and it shows you that the Amber MRT is going to be built here, and this is the condo. So there are huge amount of good free tools as an investor if you think that it's the right time for you to buy. And I think if you're buying it for your own stay, should not be a problem. I mean, I myself have bought a couple of properties. I mean, now is a good time because the property market has really softened quite a fair bit. And if I don't know what's going to happen in the next 1 year, because you never know whether it's going to be external shock. You know, there's a bit of scare from the China's devaluation of yuan, right? So you see the stock market dropping a little bit. So some people say that yeah, it's just a small correction. Others say that it's going to be a harbinger of bigger things to come. But we all never know. But if you are buying it for your own stay, I don't think it's too much an issue, because in the long term, if you believe in the Singapore story, that it should not be an issue. Especially if you look at prices are not really exceptionally high today. But if you are buying it for flipping, I will say no, don't ever buy properties for flipping, no matter how good the market is, because it's just too dangerous. I mean, that's my own opinion, right? But if you're buying it for short-term investment and for rental yield, there will be pockets of opportunities everywhere that you can use the website to search for. You can study the master plan. You can look at all the research that we provide on the SRX Property Portal. Right? Okay? So that's all. Thank you very much.